please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Of the show with our top focus at this hour, and that's the markets. The positive start to March series has seen follow through the day as benchmark indices rallied close to 1% in today's trading session. So let's pull those up for you. The Nifty, as you can see there, saw a gap up open and continued to surge throughout the day. The index ended with gains of about 0.4%. And look at the Sensex. The Sensex also gained more than 300 points in the green. Bank Nifty was the clear outperformer today, rallying more than 1.5%. Meanwhile, IT stocks were the clear laggards today, with that index ending more than 1% in the red. As always, let's bring in Anuj Singhal to take us through the day's trading action. Anuj, bulls clearly on a solid footing as the March series starts.
Well, good day for the markets. The March series clearly has started on a much better footing and the bulls are roaring back. Second day of century for the Nifty and more than a triple century for the Bank Nifty. Intraday, of course, the Nifty did cool off a bit in the last 15 or 20 minutes. But still, it was decent gains over there. Banks, autos, they were the ones which were leading the move today. Of course, IT was seeing some profit taking. In fact, in terms of stocks, Maruti perhaps was your stock of the day today, up 4%. Larsen Toubro, Tata Motors, and then, of course, the large financials, Indices, Axis, Bajaj Finance, Kotak, HDFC Bank were all surging in trade. On the losing end, Sun Pharma was down and some profit taking in TCS and Infosys after the recent move. In the F&O space, there were some big gainers like Chennai Petro, Torrent Power, Equitas and Ujjivan, Voltas, and of course the ADAG pack like Relnevel and Reliance Communication. Of course, we have to talk about Oriental Bank of Commerce. That stock was down 10%. The market right now does not like anything to do with the PSU banks, and on this, of course, there was some news as well. All in all, you'll have to say that the bulls owned this day as well after Friday. Now the market runs into congestion though. Last time we topped out at somewhere around 10,640. That's also the 20-day moving average. Let's see if that's taken out or not.
Okay, let's see if the bulls are able to maintain that momentum, Anuj. Thank you so much for joining in with that. But let's get you the latest in the PNB scam. While probe into the PNB scam gathers steam, one of the biggest concerns within the entire banking industry is who will pay for the fraud. Well, we put forth this very question to SBI Chairman Rajneesh Kumar, and he expects PNB to pay for the LOU exposure that his bank has in the Nirav Modi case. Here's an excerpt of that exclusive conversation with India's top banker.
As far as our exposure is concerned on Punjab National Bank, so that number is very much confirmed, calculated and advised to the Punjab National Bank. And our exposure on one of the companies, Gitanjali Gems, that also has been crystallized and there was no issue around that. So our numbers, our claim is clear, but because there are some secondary market purchases, so double counting has to be avoided. And that is where I think only PNB can give you a confirmed number.
No, I agree, sir. In PNB, what we have got is that 11,400 odd crores of one kind of exposure and another 1,700 crore exposure to Gitanjali. So we are working with something like 13,000 crore. My question is that are there other diamond companies, or, you know, either because of a follow-on effect or because all banks have gone and done a thorough search? Should we expect that there will be other, you know, either wrong cases of lending or, you know, manufactured LOUs without a credit memo? Any such problems are they likely to emerge? After all, the IBA met over this issue.
So I don't think so. It seems to be a case confined to the particular branch of Punjab National Bank. At least for State Bank of India, I can confirm that there is no such issue, no such problem. And I'm sure by now all other banks have also would have reviewed their portfolio and would have arrived at the similar conclusion, because if something was wrong somewhere, by now I presume it would have come out.
Okay. So the other thing that has come from the Reserve Bank, I believe, are circulars telling banks that they have to connect their SWIFT communication system to the core banking system in cases where they are not. I know you all are not involved. Any other instruction from the regulator on this?
No, other than whatever they have said about the safety of the SWIFT and the controls which need to be in place. So nothing else we have heard as of now.
And deadline of April is possible to do this. It's not very difficult for the entire banking system to comply.
Very much.
Okay.
Very much.
Has the regulator or the government or PNB itself decided who will pay that 11,400? Bankers, when we last heard, there was still some argument between PNB on one side and other bankers.
So I am very confident that things will get sorted out between PNB and the other banks.
Okay. You are expecting them to pay you?
That is my expectation, of course.
Okay. No, but clearly the government or RBI have not come out with anything? They have not intervened?
Not to my knowledge.
Okay.
Okay, so SBI there confirming that PNB is going to be taking care of the letter of undertakings that had been signed, and all the exposure is going to be taken care of by the management. Again, that is what SBI does believe. But staying with the entire theme of economic offences, this one is a case against Uttar Pradesh-based Simbhaoli Sugars. CBI has filed a fraud case against executives of Simbhaoli Sugars for causing alleged loss of over 100 crore rupees to Oriental Bank of Commerce. Now, the bank says that it had sanctioned a loan to the company for financing sugarcane farmers supplying sugar produced to it. However, the lender alleges that Simbhaoli Sugars dishonestly and fraudulently diverted that money for its own needs. The sugar manufacturer and the other accused have been booked under criminal conspiracy and cheating under the Prevention of Corruption Act. That's far as one specific scam is concerned. But let's talk about important policy stories. The government is gearing up to introduce a new law, which is the Fugitive Economic Offenders Bill. In a bid to checkmate absconding corporate defaulters, the Law Ministry had already approved the draft bill in September last year. But now, Money Control learns that in the wake of the 11,400 crore rupees scam at the PNB involving Nirav Modi, the government does not want to waste any more time and wants to introduce it in the second leg of the budget session itself. Gaurav Chaudhary from Money Control is here with us. Thanks for joining in, Gaurav. How exactly does the bill propose to tighten the noose around absconding corporate defaulters? Are the loopholes in the system likely to get plugged?
First draft of this was made sometime in May by the Finance Ministry, which was subsequently sent to the Law Ministry. The Law Ministry vetted it sometime in September, and it has remained at that. In the meantime, the 11,400 crore scam involving Punjab National Bank and celebrity diamond trader Nirav Modi has broken out, which has taken the country by storm. So the government is now of the view that it's about time to fast-track this bill, legislate it, and make it more difficult for people to run away, in the sense that the provisions of the law are going to act as major disincentive for people to run away. It will allow investigating authorities like the Enforcement Directorate, the Central Bureau of Investigation, the Serious Frauds Investigation Office, and the Income Tax Department, and even Economic Offences Wing of the state police departments to actually attach properties and assets and sell these without going through a lengthy judicial process. The provisions of the bill allows for setting up a special court that is going to quickly decide on how and when properties that are attached by investigating agencies can be sold out to recover dues of corporate defaulters. And this loan is going to deal only with those who have fled the country after defrauding banks or committed some kind of an economic offense. The economic offenses defined in the bill includes a wide range from cheating and forgery to tampering of electronic records, as well as presenting of wrong, as well as defaulting on bank loans, which would include probably people like Vijay Mallya. We do not know yet whether the bill will be, or the law once enacted, will apply retrospectively. What is a possibility, however, is that once the special court is set up, all existing cases, all cases that are currently outstanding in various courts in the country may be transferred to the special court, which could actually bring its jurisdiction to cases like involving Vijay Mallya and Nirav Modi also.
Okay, Gaurav, thanks for putting that into perspective. Now, sticking to this theme, the Financial Intelligence Unit, or the FIU under the Finance Ministry, has released a list of nearly 9,500 non-banking financial companies which have been categorized as high-risk financial institution. Let's put this into perspective. Surbhi Upadhyay, who has been poring over this list since morning, is here with the details. Surbhi, first up, which are those companies as far as the listed entities and the group firms are concerned, and what are the implications of this?
Kritika, the first question is still easier to answer because we've gone through the 9,500 names. And now, some are straight away listed entities, and I can point those out. Many of these stocks are listed on the BSE. So the most interesting one perhaps would be McDowell Holdings, which has been named. Then there are smaller companies like Capital India Finance, Interglobe Finance. I mean, these are very small entities listed on the BSE. 15 to 20 crores of market cap is what we're talking about. There's TCI Finance, there's SE Investments, which is what we know as Paisa Lao. I mean, it's a recent listing from the IIFL promoter group. So these are some names worth taking note of. But the more difficult task is to ascertain the named entities which could be perhaps listed, linked to listed entities. I'll give you some examples. I mean, we reached out to Reliance Commercial Finance, to Reliance Capital to ascertain if there's a link between Reliance Commercial Finance and Reliance Capital. The reply that we got from RelCap was that Reliance Commercial Finance ceases to exist from 2011 because it has been merged with Reliance Capital. Similarly, we reached out to DLF to understand what DLF Finvest is all about. Finvest is an entity that's been listed as a part of this 9,500. So DLF said that it's a dormant subsidiary of the company and that they're fully compliant with all the RBI regulations and all the filings. DLF Finvest does not have any loans from public or banks, does not lend to third parties. That was DLF's clarification. We also heard from the Wellspun Group today because of an entity called Wellspun Finance, which is part of this list of 9,500. Wellspun Group says they've stopped NBFC businesses long back. They've surrendered the certificate of registration back to the RBI, and also went on to say that Wellspun Finance is predominantly a closely held unlisted entity, and none of the companies of the group listed on the stock exchange have anything to do with this entity. Now, these explanations are fine. There are lots of other names. I mean, I could go on and on naming. Magna Consumer Finance. We are still waiting to hear if there's a link with Magna FinCorp here. Centrum Financial Services, Arihant Finance, there's Radico Khaitan Finance. We've written to Radico Khaitan to figure out what the links are. We're yet to hear from them. Minda Finance. We've written to the Minda Group once again. So the point is that we're still trying to establish the links, Kritika, but the second part of the question is more difficult to answer. Because the FIU has not come out with any clarity on what does this mean, high-risk NBFCs, in what manner. Are there any penal provisions coming their way? Are there any lending restrictions coming their way? None of this has come through clear from the circular because perhaps that's also the RBI's mandate. Right now, it's just a red flag that's been put out. We will have to see what the regulator has to say on the matter as well.
Surbhi, I think this is just the tip of the iceberg. There is a lot of unanswered questions that need to be answered over the course of the day. And of course, we will be tracking those for you. We'll have Surbhi back with that. But for now, we'll have to take a very, very short break. On the other side, when we return, we will tell you about the latest setback for Singh brothers in their battle against Daiichi. Stay tuned for that story. Welcome back. You're still with After the Bell on CNBC TV18. Now, there's no respite in sight for Fortis Healthcare Singh brothers. The Delhi High Court attached all assets of RHC Holdings and Oscar Investments. Remember, these are holding companies of Malvinder Shivinder Singh. Ashmit Kumar, who has been tracking the story and was at the court today, is here with the details. Ashmit, take us through what transpired in court and what was the rationale that was given out to them.
Well, the rationale, of course, is a 3,500 crore arbitral award that was granted in favor of Daiichi and which has been upheld by the Indian courts right after the Supreme Court. Now comes the question of execution. How and if and when will the Singh brothers pay up? Now, in pursuance of that, the Delhi High Court coming out with a three-part order. The first part is that the holding companies, that's RHC as well as the Oscar Investments, these companies, the assets that they submitted before the High Court in sealed cover, as per their own valuations as of February of 2017, mind you, those assets are valued as of now at 3,200 crore rupees. Now, they've submitted that asset list, and what we understand is that the Delhi High Court has, number one, attached them and has sought for a valuation of the same. The second issue is, the second direction is with respect to the bank accounts. The Delhi High Court has restrained both RHC Holdings as well as Oscar Investments from working their bank accounts in any shape or form except for payment of salaries and payment of statutory dues like taxes, etc. The third part is interesting. Singh brothers were also parties in this entire case, and now the Delhi High Court has turned the heat onto them and has sought a list of their unencumbered assets, and they have time only till about the next 2 weeks to submit a detailed list of their updated list of assets. And the next hearing, we understand, is slated for March or for 23rd of this month.
Okay, Ashmit, 23rd is the next day to watch out for. Thanks for joining in with that. But let's get you the IPO corner. Warburg Pincus-backed Lemon Tree Hotels will be hitting Dalal Street soon with its 1,000 to 1,200 crore rupee IPO. Speaking to CNBC TV18's Priya Sheth, Patanjali Keswani, the chairman and MD of Lemon Tree Hotel, says that the issue is largely an offer for sale, which will see a partial exit by long-time shareholder. There's a slice of this conversation.
Well, Warburg has been invested with us since 2006, so their fund life is over. So they will be exiting a part of their stake. So I expect them to sell about 12% of the issue, which is, as I said, 20 to 22%. And some friends of mine who invested with the company way back in 2005 and 2006, after I had started it, they will also be exiting a part of their stake. So in total, as I said, half of the stake sale, the offer for sale will be by Warburg and the other half by friends.
Since this is an offer for sale, we wanted to understand with regards to the investment in growing the property and expanding it further, what would be the amount of money that you would be deploying in the business over the next 2 to 3 years?
Well, right now, we have fully invested. See, we are going to add about a little under 3,000 rooms in the next 3.5 years in the company. Of which about 2,000 rooms, about 1,500 rooms are owned by us and 1,500 are rooms that we will manage. So the funding required for these 1,500 rooms is about 2,000 crores. And as I said, we are fully funded as far as equity goes. We'll be borrowing for the balance. And when all this gets done, we'll be a little under 8,000 rooms in India. And for that, we don't need any additional capital, which is why this is a complete secondary sale and offer for sale.
Okay, and that once it does hit the markets is going to be one of the biggest IPOs in the hotel space. Let's take a very, very short break on that note. Up next, Xi Jinping's attempts pushes China back to one-man rule. Details when we return. Welcome back. Let's get to the big global story now. Chinese President Xi Jinping has pushed China back to one-man rule. The Communist Party of China yesterday announced move to abolish the entire two-term limit that was there on the presidency in China, thereby paving the way for Xi to stay on forever. We are now joined by Bernie Liu to get us more details on that story. Bernie, why did Xi Jinping extend his term? And, what are the events that really led to this decision being taken by the entire government?
It was something that was that's been surmised and speculated about since October last year. Every 5 years, twice a decade, they hold a major Communist Party Congress in China, and at that time, the president was saying that there are 2 key dates way out in the future in the calendar that he was thinking of. 2035, which he said would be marked around the time of completion of socialist modernization in China, and then the centennial of China, of the modern People's Republic, 2049, when China would achieve great power status on par with that of the United States. Now, it might have seemed like a bombshell in the media for them to say, he wanted to, the Communist Party wanted to eliminate the term limit. It's limiting the president and the vice president to 2 consecutive terms. 2 of the other main titles that the president holds, that of the General Secretary of the Communist Party, which is actually functionally more powerful than that of president. The term president is actually seen as more of a ceremonial one in the PRC. And the other post he holds is the chairman of the Central Military Commission. So the mention of those dates, 2035, 2049, led a lot of people to assume that his work wasn't going to be done within the 2-term limit by 2022.
Okay, Bernie, thanks for putting that into perspective. And we will take that story forward over the course of the next few hours. But the other big story today, the sudden death of legendary actress Sridevi, has left the entire film industry in shock. Her mortal remains are yet to leave for Mumbai. From Dubai, highly placed sources have confirmed that the Dubai police have ruled out any foul play in Sridevi's death, and a death certificate could be issued shortly. Khaleej Times reporters have confirmed that no exceptions have been made in the case just because it deals with a celebrity. Sources have also confirmed that a sealed envelope has been given to the Indian authorities there, who in turn have handed it over to the Dubai police. Well, with that, it's a wrap on this edition of After the Bell. Many thanks for staying with us and watching the show. But stay tuned to CNBC TV18. All the market action will be lined up with us after the break, since Markets Today Talkback is up next.